How are you thinking about the China story as we come towards the end of the week? I was reading the John Author's piece. He was talking about the difference between things being investable and tradable. From everything you've said, you've seen China as very tradable for quite a while.
Yeah, absolutely. I think, look, it's been a pretty extraordinary week. The superlatives across the gains, across all sorts of Greater China indexes are really quite immense. Where do we go from here? Well, we have the extended holiday in China. We have a couple of days off in Hong Kong. I have no strong view in the short term here. I do absolutely think there are material upside gains to be made in the months ahead. I just think that we've gone so much this week that, you know, who cares where the next few percent are? I mean, that's one of the things that's ironic, is that a move of 2 or 3% now just seems irrelevant. It doesn't matter if we pull back 3 or 4%. Sure, that's only back to where we were like about a day ago. And that just means that people will get excited about a chance to buy the dip again. I think that there's been a macro turning point in the world's second largest economy that is material for Chinese stocks, material for Hong Kong stocks, material for Asia stocks, material for the world.
Material for the world. OK, so let's talk about the world. You've got a US economy that still looks like it's doing OK. You look at the claims data yesterday, you look at the nowcast data, it all signals actually that this is an economy that's doing just fine. Thank you very much indeed. You add in the world's second largest economy. Are we convinced that inflation is coming down? Are we convinced that the Fed can cut hard from here? Are we convinced that at some point soon we may be back maybe talking about hikes? Could that be something that we should be more convinced about?
Is that the royal we, Guy? Because I am most definitely not convinced that inflation's coming down. I think that people are way too complacent. I don't think we get anywhere near the extent of cuts that are priced into the curve in the Fed. I think that the initial claims in the US, that's one of the best kind of labour market indicators, high-frequency ones, at the lowest level since May. Now, since end of May until this week, US two-year yields fell 145 basis points. And they fell on the narrative that the labour market was crumbling and inflation was conquered. Well, the labour market's not crumbling. The high-frequency data shows that. And we're just normalising from an extremely hot labour market. And second of all, we just got massive upgrades to growth, suggesting that Fed policy hasn't even been that particularly restrictive and probably been way too complacent on inflation. PCE today will be another important sector. We've also got personal spending, personal income. I expect the data later on today to further boost US yields again. I think two-year yields have a significant amount to rise into the year end, and I think that stocks will survive that.
And the yen, just briefly, Mark, the yen is now up, having been down earlier on the back of what we were discussing in the last part of the programme, could be the continuity outcome for the Japanese leadership.
The initial reaction is completely logical. Yen rallied because people were pricing in the more dovish PM candidate to win. Instead, the hawkish candidate won, so yen rallied sharply. But longer term, Japan does not have sustainable inflation, and ultimately, yen will be one of the weakest currencies into year end.